All right, let's go live on Facebook. We're good? All right, we're live. Ladies and gentlemen, is trading supposed to be fun? This is actually going to enlighten you more than you could ever believe. Not only that, we're going to discuss Home Depot, which is reporting this Tuesday, as well as TJ stores or TJ Maxx, etc. We're going to go through all that, our algo levels, and more. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Is trading supposed to be fun? I'm going to actually analyze the science behind it, and it's actually something which has been taking advantage of you for far too long. This enlightenment is actually going to help you change your trading. Please, whatever you do, do not underestimate the topic I'm about to share with you today: Home Depot earnings, TJ Maxx earnings, and more. By watching this video, you're going to pause on the next slide and agree to everything before continuing. Thank you so much for agreeing to that. Now, let's just go right into the mix. We're going to start off. We have a little agenda for you here today. Always coming with a cute new quote, Eleanor Roosevelt: with the new day comes new strength and new thoughts. I want you to remain upbeat because I'm going to share something with you today which is going to help you. And we're going to start off, ladies and gentlemen, with Home Depot thoughts. So we have actually a nice slew of earnings that are coming in here this week. We're going to be sitting here discussing just a couple of them. And it's kind of weird because a lot of these names have been really strong. And, and these names have been going up. I just want to say, I think Home Depot earnings are not going to be good. I do not think Home Depot earnings will come off good. Now, again, on this one, I'm not officially adding it to my earnings list. Again, and hopefully by the time I show you is trading supposed to be fun, you'll understand why. I'm just telling you, like, nobody is going to Home Depot, not in this environment. People aren't really investing in, all their houses and whatnot. I mean, take a look. I'm going to show you a monthly of like Lennar. I mean, this thing has been coming back a little. KB Homes is just light years away from the all-time high, which was obviously done back in 2005. So a lot of these names have been, really suffering. There's Beazer Homes as well. I don't even want to get to the fact that Beazer Homes was a $410 stock prior to splits. Point being is, forget about the home builders. Let's just step aside from that for a moment here. They're probably going to miss earnings per share. That's not my opinion. That's their opinion. And who am I to disagree, with this fact coming out of the horse's mouth? On August 20th, they backed full fiscal year 2019 earnings per share of about $10.03. Analyst consensus was 10.10, showing that they might miss it. Um, you know, Home Depot sees their fiscal year 2019 effective tax rate at 25%. I don't find that well. I mean, there was an article out over the weekend how FedEx was paying zero taxes, and of course it you know, raised the political temperature in the United States by like 5 degrees on Twitter. Look, 25% is not a good tax rate these days, especially when you have companies like FedEx and Amazon paying zero. Top that off with they think they're going to be missing on their earnings really makes me scared. In fact, they lowered their fiscal year 2019 revenue and their same store sales, SSS, same store sales guidance, and they did that back on August 20th when they reported, and the stock actually gapped up for reasons I cannot imagine, and after it gapped up, right over here, you could see this big gap up here on August 20th from here, where it closed at 207.95, opened at 213.45, and rallied. Every analyst just came out and upgraded it. Like I'll even give you an example. The SunTrust analyst Keith Hughes raised his price target to $208 from 180, noting that while the comp growth was below consensus, it was still not as bad as feared. I don't even know what that means. And again, to me, it's very reminiscent of the geniuses who are upgrading with these 450 targets on Netflix. In fact, if you read my 2019 report, it was actually analyzing the Netflix analysts, showing how delusional they were, because all they would do is upgrade or defend. If Netflix gapped down, they would defend it, and if it gapped up, they would raise their targets. And I was pointing at the numbers since the beginning of the year of how bad they were. Yet the analyst just keeps, defending the stock, despite the fact that, hint, Netflix cannot make a dime if their life depended on it. Did you guys know that for how popular the service is? Yeah, they have a huge amount of monthly active users or MAUs, and all these metrics look good, and oh, they're just judged by their metrics. It's going to get to a point where your metrics don't mean expletive, because what's this? Oh my God, I think they have over 1 billion people on Twitter. What's this? Let's look at a weekly of Twitter. Ah, what happened? That's scary stuff, man. Oh my God, what's happening to this company? Let's look at the monthly. Ah, that's scary. But Mark, their metrics, they keep getting so many people who want to sign up. Yeah, the only difference is when Twitter signs somebody up, they don't lose additional money like Netflix does. Netflix keeps putting out new and new and new content, and they keep hemorrhaging away because they are literally buying their new subscriptions with billions of dollars in, you know, film and TV show budgets to make Netflix originals. All right. Why am I bringing that up? Because it's sort of reminiscent of Home Depot. The stock's trading at all-time highs. Every analyst on earth is bullish on it. The technicals to me are obviously bullish. 238.99 is all-time high. It's $1.60 off. I'm not going to come out and, be that guy that comes out bearish, but I am saying they're lowering consensus estimates and they're trading at highs. Next on the radar, we're going to just go right over to TJX, and then I have something very important to share with you. Is trading supposed to be fun? You guys are going to absolutely love the science. You're going to listen to today's episode, ladies and gentlemen, and you're going to be like, oh, that's what's going to happen to you. But let's just go second on the list here. We're going to go to TJX. They have stores like TJ Maxx and other stores that are not Do they own Marshalls? I believe, if I'm not mistaken. So, again, another store that just, has been rallying to all-time highs. I know every analyst in the world is, bullish on TJ Maxx. They could be. Here's the thing. Here's the thing. They announced on their second quarter earnings, which was on August 20th. This is a monthly of the chart, by the way. On the second quarter earnings on August 20th, and I'll show you the day, they announced 62 cents a share. It came in line with the 62 cents expected, and the stock pretty much, gapped down a little right here and then rallied. This was like their earnings date right over here, this green bar on bottom, and the stock rallied ever since. For next quarter, which is this Tuesday, which is Q3, they said they were going to make 63 to 65 cents a share. That falls short of the 68 cents expected. Okay. All right, fine. Show me your fiscal year 20 revenue. I'll forgive you. Fiscal year 20 revenue, and this is not my opinion. This is actually, in fact, their opinion. I'm just showing you their opinion. They announced that for 2020 they were going to make $2.56 to $2.61 versus the 2.62 expected. And if you guys are not familiar on earnings, I know you're sitting there like, Mark, so if they announced 261 and they were supposed to make 262, it's only a penny. What's the big deal? The big deal is that these companies are predicated on growth. And when you have a stock that just keeps running to all-time highs and you're not growing as fast as Wall Street expected you to, people get scared. That is I'm not saying, oh, the company's going bankrupt if they, no, 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 no. What I am saying is the company doesn't make money in the same sense of as of Wall Street's expectations of them. They're falling short. They're falling short. Okay? They're not doing it. They said for this quarter coming up 10.2 to 10.3 billion in revenue. A little $100 million difference. Okay, what were you expected to make? 10.37. Oh, so you mean if you score on the highest end of where you expected, you still miss by $70 million? Yikes. 2020 revenue 40.9 to 41.2 billion versus the 41.33 billion expected. Yikes. That's scary stuff. That's scary stuff. It's almost like, waking up in the morning and seeing Catherine Zeta-Jones without makeup on. It's like one of those scary moments. I'm just kidding. I love her as an actress. Do I? What shows was she in? Oh, well. Corny analogy. Excuse me. But, I mean, just look at this stock. Look at the and look, I make fun of my face all the time too, just so we're clear, right? Like I'm not the easiest thing to look at. The mirror frowns at me as I walk by. It's like gives me that look. All stupid face jokes aside, the company keeps missing on revenue, keeps lowering expectations. Reminds me of Netflix 2018 all over again. Oh, they keep lowering, but their monthly active users keep going up, as does their budget, and the stock keeps plummeting. Now I have the most important thing about this entire episode to share with you. I want you to listen very closely because I know Mark Melnick is going to say this is probably one of the more important things that I'm doing here. And I need you guys to understand something about trading which nobody else is going to share with you because supposedly it's bad for business, and this is maybe why, gurus they cry, they get tears in their eyes when Mark Melnick starts speaking because I'm so offensive. I'm so offensive, obviously by enlightening users with the truth. Maybe some toes were stepped on because maybe I just revealed their entire scam and their entire lie. Maybe, or maybe the real gurus out there are going to smile and say, thank you for saying this. Who knows? I don't know. But at the expense of everybody's feelings, I want to enlighten you to become a better trader and explain to you scientifically, is trading supposed to be fun? So before I start, how many of you guys in the Newsbeat live room think trading is supposed to be fun? Type 11 if you think it is, type 12 if you think it isn't. Not whether it's fun or not, is it supposed to be fun? People are saying yes and no. Oh my God, look at those mixed answers. All right. All right. I'm gonna ask another question, and believe me, I will put out on this Newsbeat show. Just I have to ask one more question before I put out the answers. One more questions, just one more question. You ready? You ready for this? How many people have a friend, family member, loved one, somebody you communicate with who tells you that day trading is gambling? Type in 44 if you have someone like that. Type in 55 if you don't. Respond in the comment section. How many people you have out? How many people know somebody who tells them, who tells you, not somebody who said to somebody else, who's telling you, somebody who's a friend, whatever, you know, insert your name here. It's gambling. My Jeremy Popberg is like my wife, my ex-wife too. Look, see. All right, look, you're ready. Check this out. All right, almost everybody answered yes in the Newsbeat live room. Whatever, dozens and dozens. All right, all right, all right. So, if you think trading is gambling, you probably might think that gambling is all about winning. But a range of studies show that things aren't just that simple. So I have a better question for you guys. Why do gamblers and traders, even unsuccessful gamblers and traders, keep getting a buzz? You don't know what I'm talking about? You don't know how to feel the serotonin release from your brain, the chemical concoction release from your brain into your bloodstream that changes everything. your heart rate, your nerves, your feelings, your mood. No one likes to lose, even pathological gamblers, even, dare I say, pathological traders. And yet they keep on betting. Using a casino analogy here for trading, if the house always wins, if the market always wins, why roll the dice again? People addicted to gambling frequently report that despite losses stacking up, the buzz keeps bringing them back to the card table or the slot machine or the market. A Wall Street executive admitted defrauding his family, friends, and others out of $100 million to feed his habit. He told the court during his hearing that it was just a way for me to get money to feed a gambling addiction. But if someone is ultimately losing money, perhaps even losing their job or house, wives, husbands, partners, whatever it is, as a result of this trading addiction, how can that how can that high that you get possibly outweigh the sacrifices? Now, I'm going to explain it to you. The first thing to note is that people don't just trade for the prospect of winning. Mark Griffiths, who is a psychologist at Nottingham Trent University, specializes in behavioral addictions, and points out that traders list a wide range of motivations for their habits. He surveyed 2,500 traders, and they said that the prospect of the chance to win big money in the market was the strongest factor, but it was followed closely by trading because it's extremely fun and exciting. So even when you're trading and you're losing, your body is still producing adrenaline and endorphins. People are buying entertainment in the market, and that breaks my heart. But I'm going to show you how to break away from there and break away from it through realization of what's happening. It's backed by a study that was done 10 years ago by researchers from the University of Stanford in California, who found, and I've been there recently, really great psychology department, who found that 92% of people had lost trading thresholds below which they would not go, saying that they would only risk this much, yet they risked more than that. However, the fact that they lost money overall after trading did not necessarily impact their overall enjoyment of the experience. Ladies and gentlemen, there's a part of your body that enjoyed losing money. And what I want to tell you is it's people like me. It's our fault. It's the industry's fault. You see, and you probably didn't expect me to say that. And I'm going to explain why, and I'm going to explain how to break away from it. You see, people seem to be satisfied with relatively small wins and will even tolerate even smaller losses. They tend to be conscious that in the long run, they are more likely to lose than win when it comes to trading. When you hear and you talk about, trading to people, it's like, oh, 97, 98% of traders lose. That's a fact. And losing could actually, momentarily at least, boost the positive response to a win. So when you lose, and you get a win, it creates a larger emotional outburst than usual. And this is because of how traders' expectations of winning change during a losing streak. Rob Rutledge, he's a neuroscientist at University College over in Europe in London, and his colleagues performed an experiment with 26 traders whose brains were scanned while they made a series of stock selections, each of which could result in either a certain outcome or an uncertain one, or a gamble, if you will. Participants were also asked to rate their sense of happiness after every second or third go. Plus, a similar experiment without the brain scanning was carried out by over 18,000 participants via smartphone app, which was called the Great Brain Experiment. And it's actually very interesting here, and I'm going to tell you why it's people like it's the industry's fault. Among various interesting findings, the team discovered that when participants had a lower expectation that they would win, the response to winning equal rewards was elevated. And this was evidenced both by the subjects' own reporting of how happy they felt and the data from their MRI scans. And these scans revealed an increased activity in an area of their brain associated with your dopamine neurons. And the dopamine is obviously it's a complex neurotransmitter that could be, in this case, linked to changes in your emotional state. The non-nerdy part, if people lose a bunch of money trading and that lowers their expectations, that will increase how happy they are when they finally do win. This alone is tantalizing, ladies and gentlemen. If a couple of bad things in a row happen to you and your expectations go down, but then you actually get some good outcomes, you'll probably be happier, scientifically speaking. Though you should probably walk away at that point, right? And take a break and, walk outside and get a breath of fresh air. But are devices like trading softwares actively manipulative as well? There's certain cues that the market gives to traders, and much is still unknown about, you know, how trading softwares impact trading behavior. But um, for example, when a trader loses, in the market, you're going to see a big red P&L, for example, on your face. Supporting the frustration theory and the cognitive regret, this might make the trader more enticed to do more trades. So, in English, ladies and gentlemen, I'm going to break it down for you very, very simple. And this is going in. You ready for you guys ready for the aha moment? I'll make it. Sorry if I'm getting a little nerdy here. I'm going to try to take the nerd out and speak English. You guys, okay? Watch this. One key factor in how addictive any kind of gambling might be is how frequently players can place bets, because the availability of opportunities to gamble or trade is linked with the level of problem trading or problem gambling in a given community. It's the actual number of potential rewards, not the actual rewards or even the type of trades, that drives pathological traders and gamblers. Now let's talk about the English. How many people know those trading rooms who are dumping hundreds of trades at you, dozens of trades at you, newsletters, dozens of trades for you, videos like mine, dozens and dozens of trades for you, inside a trading room, and there's a meeting of a stock list you're using, and there are dozens of them on the list? They are playing into your gambling addiction. You are created with this, and that is the truth. It's not that you're being scammed, it's that you're being, if you want to really take it to the nth degree, you're being genetically manipulated for your weaknesses. That is what is happening to you. So when you actually enter the situation where you can have, let's say 10, 15, 20, 25 trades a day, and you keep doing it and you go like loss, 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 when you actually get a win, even if your P&L is still down, it feels, oh, amazing. So what happens is, when people teach you how to trade, the funniest correlation here is they tell you to trade a certain setup, and if you see that setup, you go for it. It doesn't matter, you push forward, and what that does is it creates an opportunity for you to trade dozens and dozens of times. And what happened to you by doing it is, while you think that you were doing something smart, while you think that you were doing something that was supposed to help you, what you did is you fed into the primal, carnal, primitive brain functions of humanity. And what they did is they just played that your brain like a fiddle, and they took advantage of you that way. And you know what? I used to do it all the time. I used to do it all the time. Back in 2007, I would say 2007 to 2013. You want to say like six, I don't know if it was 6.5 years, whatever it was. I don't remember the months at this point. But between those 6.5 years, I would probably spit out on a broadcast, I would probably spit out, I don't know, 50 to 100 trades a day. And I was falling victim to this. And again, it didn't come from a bad place. And I know I love bringing up my past and what I did wrong because you have to realize that is the reason of where I am today. Very few of us gurus have huge egos, by the way. Thankfully for me, that has never been a problem. I do not have an ego. My ego is the size of a grain of rice. I do not have a big ego whatsoever. I could look in the mirror and tell myself expletive'd up, I screwed up. I could do that. So what that does is that actually gave me the benefit of allowing myself to grow and understanding these things. And when I'm spending my weekend speaking with psychologists, board certified psychologists, to try to connect this bridge for you, to connect, there is no bridge, to build the damn bridge between the science and the trading into one, what it does is it literally explains to you on a scientific basis what's happening. These services, combined with a trading software that has buying power, are designed to keep traders interested by offering substitute rewards, like a little win here after a loss with the possibility of a bigger win than usual next time. And that is where your brain is going. And if you build in lots of little rewards that are not necessarily financial, it will keep people responding. If you see any service out there that is just unloading ideas on you, run and understand at least what is happening to you. Because what they are doing is they are playing to that primal carnal part of the human brain, which has not yet evolved over however long you think humanity has existed. 1, 2, 3, 400,000 years. Maybe you think more. I don't really know, and I can't prove it to you because Mark Melnick actually does not have a time machine. You know, I just look at this, and when I speak to these psychologists, it's kind of crazy because none of them really understood how I was trading before when I'm picking their brains. But when they actually respond to me, I'm able to actually fully understand exactly what's happening. So when you're in the Newsbeat live room and I do 1, 2, 3 trades on any given day, and I'm just sort of sitting back and you see what you believe is hundreds of opportunities flying by your face. The same thing scientifically is happening when you walk on the slot machine floor in a casino. If you haven't noticed, every time you walk through a casino, you can't get to the poker room, with the exception of the Taj Mahal being the only casino in America that allows this. You can't get to the poker room without walking through the slot machine in the casino. Because the whole point is they're revving your engines up to seem like there is just all these rewards around you that you're missing. And your brain hungers for it and it wants it and it draws you to push and pull money into that machine. And if you wake up in the morning and somebody is giving you, you know, a scam list or, excuse me, a scan list, one letter apart, excuse me, and they're showing you, like, here are the 10, 20 names that I'm watching. I used to do this every day. I used to force myself when I was broadcasting somewhere else. I used to always have 10 names every single day, no matter what the day. Because I thought it was the best thing to do. Little did I know I would be a lot better doing what I do today, giving out zero, one, two names maximum. And if you're still the person who believes that you should be sitting there trading all day and maybe you're good at it, I promise you one thing, you are psychologically poisoning yourself even if you're profitable. That's what I learned. I'm profitable every single year since 1999 as a trader. Little did I know the damage I was doing to myself. You want to spend time with your kids, you want to spend time with a loved one, you want to be able to do the things in life in which you enjoy outside of substance abuse, whether it's alcohol, cigarettes, marijuana, vaping, God forbid anything worse than that. Like, you know, you're going to need to fall on something and it's going to pull you down a dark rabbit hole. Take it from somebody who is one of the more active traders on this planet over his 20-year career, who finally learned this the hard way and can deliver this to you in a very simple video. Those are the algo levels for tomorrow. Enjoy them, write them, tattoo them. The funny thing is, this is also where it goes from the 40. I'll bring the screen back up again. This is also the thing that goes back to the 4357 paradigm. When traders have strategies that only work about 50% of the time, like rounded up or down towards that 50% level, like 43 to 57, they will try to throw as many trades at you as possible, and you are going to be more likely to fall in that trap because your brain cannot differentiate what if it's harming itself or helping itself. If you have a strategy that works 30% of the time, 35% of the time, your brain is going to recognize that you have to stop throwing money at it. If you have a strategy that works 70, 75% of the time, your brain is going to feel the same way and know that it's a good strategy and you're going to keep throwing money at it. As soon as you're within that 43-57 paradigm, your brain is confused. And then you just get so many trades unloaded on you. It's just a matter of time before you tilt and blow up your account. Tilt meaning you start doing stupid things in which you know you should not do, doubling, tripling, quadrupling down so you don't suffer that one loss in which you were really needed that win for. And before you know it, your account is blown up. Stay away from it. Stay away from Wall Street's nonsense. Stay away from the 4357 paradigm. Stay away from the scams of extremely active trading. Only very few people in the world can do that effectively. Yes, you're looking at one of the people who can, and that person is telling you, for the masses, it's a scam. For the unique individual, it's poisonous and toxic. Take it from an ex-professional gamer who could sit there and look at numbers all day and push the keyboard all day. And if I wanted to, I could extract $2,000 to $3,000, hyper scalping all day, but I wouldn't be able to look my wife and children in the face at the end of the day. I would be like, huddled up in a fetal position. So when it comes back to the point, is trading supposed to be fun? The answer is the answer to the question is yes, absolutely. Trading is supposed to be fun, but not in the same sense of fun as falling within a 4357 paradigm and over trading. I'm sure driving a car off a cliff at 200 miles an hour is exhilarating and fun. Unfortunately for you, it will only last one time. As traders, if you want to go down the exhilarating and fun route through the toxic way of doing it, you can blow out your money and you might still feel good doing it and not understand what happened exactly, only wanting to dump in more of your savings and get back. Follow a trading community that understands this. Follow a trading community that implements strategies that help you avoid over trading, and you're going to be one step closer to being just another Newsbeat story, just another consistently profitable trader. I hope you guys enjoyed the Newsbeat show. If you guys enjoyed this video, slap the like button right now. I don't collect a check from YouTube or Facebook. In fact, I never have. However, by liking this content, I will know to bring you more things like this, more things to educate you, more things for free to help you hopefully get to that next level in trading. Because ultimately, We all wanted to be traders for the long run. Trading is a job that almost every single trader will say they want to do for the rest of their lives. How about we start treating it as such? I hope you guys enjoyed the Newsbeat show. Happy trading, make money, and I'll see you guys tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful evening. Group coaching time for the Newsbeat room.